So, you're a freelancer, your own boss, and you're making money. But here's the catch. The IRS wants its share. And if you're not careful, you could lose thousands. Today, we're breaking down the 7 most expensive and avoidable 1099 tax traps freelancers fall into. Too many treat taxes as an afterthought, only to get hit with penalties, interest, or even audits. It's not about being a tax genius, just knowing the basics can save you a fortune. We'll cover everything from misclassifying expenses to missing entire tax categories. My goal: help you keep more of your money, stay on the IRS's good side, and run your freelance business with confidence. Grab a coffee and let's dive in. This could literally save you a fortune. Let's start with a classic mistake: misclassifying business expenses. Many freelancers try to write off everything: laptops, dinners, even vacations, thinking it's all fair game. But the IRS only allows deductions that are both ordinary and necessary for your business. Blurring the line between personal and business spending is a huge red flag. That daily coffee? Unless it's a client meeting, it's not deductible. If you can't prove a clear business purpose with documentation, the IRS can disallow the deduction and hit you with back taxes and penalties. Solution: open a separate bank account and credit card for your business. Never commingle funds. Use your business card for business, personal card for personal. It keeps your records clean and defensible. Know your categories: software, marketing, office supplies, and professional services are usually safe. For mixed-use items like your phone or internet, only deduct the business use percentage. Keep a log to back it up. Don't guess. Track your usage for a month or two. Meals? You can usually deduct 50% if you're with a client and discussing business. Keep records of who, when, and why. Lavish or personal meals, not deductible. Use accounting software to categorize expenses as they happen and keep digital receipts with notes. The key: be honest, organized, and proactive. Don't let sloppy expense tracking trigger an audit or cost you money. Stay within the rules and you'll maximize deductions without risking penalties. Treat your expense tracking like a business, not a guessing game. The peace of mind and the savings are worth it. Don't let lazy bookkeeping sink your freelance career. Next up, forgetting to pay quarterly estimated taxes, a mistake that blindsides many new freelancers. As a 1099 worker, you're responsible for sending the IRS their money throughout the year, not just in April. The IRS expects payments in 4 installments: April, June, September, and January. Miss a deadline and you'll face penalties and interest that add up fast. Use the safe harbor rule. Pay at least 90% of this year's tax or 100% of last year's, 110% if you made over $150K. Freelance income is unpredictable, so reevaluate your numbers every quarter. Set aside 25-35% of every payment you receive in a separate tax savings account. When the deadline comes, the money's there. No scrambling, no debt. Pay online using IRS, Direct Pay, or EFTPS, and mark deadlines on your calendar. Forgetting isn't an excuse. The IRS will just bill you for the penalty. Don't forget state taxes. Most states have their own estimated tax rules and penalties. Build these payments into your business plan from day one. This single habit can save you stress, money, and headaches. Don't let quarterly taxes sneak up on you. Make it routine, and you'll avoid nasty surprises. Stay proactive, and you'll keep your freelance business on solid ground. The IRS wants their money on time. Give it to them and keep your peace of mind. Don't let estimated taxes be your downfall. Plan ahead, pay on time, and you'll stay in control. It's a non-negotiable part of freelance life. Here's a trap that catches more freelancers than you'd think: not tracking and reporting all your income. Money comes from everywhere: clients, platforms like PayPal or Venmo, even cash. If you got paid, it's taxable whether you received a 1099 or not. The IRS's systems are sophisticated. They match payment data from platforms and clients to your tax return. If your reported income doesn't match what they see, you're asking for an audit. Cash payments, direct transfers, bartering, everything counts as income. Don't assume you can hide cash or small gigs. Tax evasion is a serious risk. Solution: use a dedicated business bank account. Deposit every payment, no matter how small. Log each payment in your accounting software, noting the client and project. This isn't just for taxes, it helps you understand your business's health. Barter deals? Report the fair market value as income. At year-end, compare your total income to all 1,099s and 1,099Ks you receive. If there's a mismatch, figure out why before you file. Report your actual total income, not just what's on the forms. Be meticulous. Accuracy here is non-negotiable. Clean records protect you from audits and help you grow your business. Don't cut corners, track every dollar. Now let's talk about the tax that shocks most new freelancers: self-employment tax. As a freelancer, you pay both the employer and employee share of Social Security and Medicare, 15.3% of your net earnings. This is on top of your regular income taxes. Many forget to factor this in, only to get hit with a huge bill at tax time. You do get to deduct half of your self-employment tax on your personal return, which helps a bit. But don't let that fool you. This tax is a big deal. Build it into your pricing and savings plan from day one. When setting your rates, remember you're covering this extra tax yourself. Your quarterly estimated payments must include self-employment tax. Use Form 1040 ES to calculate and pay it throughout the year. Every time you get paid, remember, about 15 cents of every dollar goes to Social Security and Medicare. Don't let this catch you off guard. Plan for it, price for it, and save for it. Understanding self-employment tax is the difference between a profitable freelance business and a financial mess. Make it part of your routine, not a surprise. Stay ahead, and you'll never dread tax season. The home office deduction is a huge tax break for freelancers, but it's often misunderstood or ignored. Don't skip it out of fear. It's common and accepted if you follow the rules. You must use a part of your home exclusively and regularly as your principal place of business. Exclusively means no personal use, no exceptions. Regularly means it's your main spot for business activities. If you qualify, you can use the simplified method, $5 per square foot, up to 300 square feet, or use the regular method. Deduct the business use percentage of your home expenses: mortgage interest, rent, utilities, insurance, and repairs. Keep meticulous records. Measure your space, save receipts, and document your calculations. The regular method can mean a much bigger deduction, but requires more paperwork. If you're organized, it's worth it. If not, stick to the simplified method. Don't leave money on the table out of fear or laziness. Claim what you're entitled to, and do it right. The home office deduction can save you thousands. Just follow the rules and you'll be fine. Don't let myths or confusion stop you from claiming what's yours. Take the deduction if you qualify. It's one of the best perks of freelancing. Ignoring retirement contributions won't get you in trouble with the IRS, but it could cost you a fortune over your lifetime. As a freelancer, you're responsible for your own retirement. No employer 401k or match. The good news? You have access to powerful, tax-advantaged accounts like SEP IRAs and solo 401ks. With a SEP IRA, you can contribute up to 25% of your net self-employment income, up to $69,000 for 2024, all tax deductible. A solo 401k lets you contribute as both employee and employer, often allowing higher contributions, plus Roth options and loans. The trap is procrastination, waiting until you make more money to start saving. Compound interest works best with time, so start early. Every dollar you contribute lowers your taxable income and builds your future. If you're in a 24% tax bracket, a $10,000 contribution saves you $2,400 in taxes. Open an account at a major brokerage as soon as you start freelancing. Make contributions regularly, not just at tax time. Don't wait. Your future self will thank you. Retirement savings are one of the best tax moves you can make. Take advantage of these accounts and build wealth while saving on taxes. Make retirement planning a habit, not an afterthought. The final trap and the foundation for everything else is failing to keep proper records. Good records are your best defense against audits and your best tool for running a successful business. Start with a separate business bank account. This is non-negotiable. Use accounting software to track income and expenses and attach digital receipts to every transaction. Keep all bank statements, invoices, 1099s, and documents for major purchases or loans. For vehicle deductions, use a mileage tracking app. Don't try to recreate logs later. The IRS generally requires you to keep records for 3 years, but keep them for 7 to be safe. Digital storage is cheap. There's no excuse. Good records aren't just for defense. They help you see your business's financial health. Run profit and loss statements, spot trends, and make better decisions. Treat record keeping as a weekly habit, not a last-minute scramble. Spend 15 minutes each week organizing your transactions. Consistency saves you time, stress, and money at tax time. Professional record keeping separates amateurs from real business owners. Don't let disorganization cost you deductions or trigger an audit. Your records tell the story of your business. Make sure it's a story you can prove. Stay organized, and you'll always be ready for tax season. Make record keeping a priority, not an afterthought. There you have it. the 7 biggest tax traps freelancers must avoid in 2025. We've covered expenses, income tracking, quarterly taxes, self-employment tax, retirement, home office deductions, and record keeping. It may seem overwhelming, but just by watching, you're already ahead of the game. Remember, this video isn't a substitute for professional advice. Find a CPA who specializes in freelancers. A good accountant will save you more than they cost. If you found this helpful, hit subscribe and the notification bell for more tips on running a profitable freelance business. Thanks for watching, and here's to a stress-free tax season.